Welcome back to Teshkid FX for another Agix price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Agix chart, which at the time of this recording is seeing a massive breakout to the upper side. And you can see that here on TradingView the market is up by 4.4%, which is a very nice bounce to the upper side. And at the time of this recording there are key significant areas that I'm watching here on the charts, and the first one is the 20-day MA here on the 4-hour chart, and also our significant high at around the $0.5 mark. We have also continued to obey the Elliot structures, where I believe that we have fully maximized our target areas to the lower side in the formation of these wave 4. And whatever we are seeing at the moment is the start of an explosive move to the upper side in the formation of a larger Elliott wave count 5 that I have right here in red. And before I get further into the technical analysis and also give you my next price targets here on the Agix chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart by first giving you the short-term scenarios that I'm expecting to play out, where we have fully maximized our target areas in the formation of these wave 4, and whatever we are seeing is the start of an explosive move to the upside in the formation of these wave 5. And in the formation of that wave 5, which is an impulsive wave, I also expected to see a 5-wave structure in formation, where you can see that I have this Elliott structure in yellow, having that as the first wave to the upside, giving us a peak at around the $0.5 mark. Then we saw a corrective structure in the formation of this wave 2, fully maximizing our minimum retracement area in the formation of this wave 2, which is within this blue target area. And after seeing the low for that second wave, whatever I was expecting next is an explosive move to the upper side in the formation of this wave 3, where I gave you minimum target areas to the upper side in my previous videos by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that gave me a minimum target area to the upper side in the formation of this wave 3 at the fib level 1.618, and that is at around the $0.6476 mark, and that is the minimum that I'm expecting Agix to do here on the short-term scenarios. And for that move to also play out, I said to you that we needed to also continue holding within this target area over here, and that is after losing the 20-day MA and also losing our significant high at around the $0.5 mark. And this target area lies between the fib level 0.5 and the fib level 0.618, and that is by connecting the Fibonacci's from the low of the second wave to the high of that wave 3. And you can see that within this target area we have seen the support that we needed, and right now we are seeing a run up to the upper side in a move that I'm now watching the 20-day MA here on the 4-hour chart. And the moment we manage to break above the 20-day MA, have the support that we need for us to continue gearing up, then I'll be watching our next key high at around the $0.5 mark. And once we manage to break above it, then we have enough momentum for us to continue gearing up to fully maximize our target areas to the upper side in the formation of this wave 3 at around the $0.6417 mark. So that is what I'm expecting here on the short-term scenarios. My next target areas, once these run up to the upper side continues, is the area at around the $0.64 mark to fully maximize my target areas to the upper side in the formation of that wave 3. Once that plays out, then we can expect a bit of a pullback in the formation of this wave 4, then continue gearing up in the formation of this wave 5 of this Elliott structure right here in yellow to fully maximize the formation of this wave 5, which I'm expecting on the long-term scenarios. And giving you the long-term scenarios that I'm expecting to play out, you can see that I have this Elliott structure in red, where you can see that after making our lower low down there, we started this explosive move to the upper side obeying the Elliott structures, where you can see that we made our high in the formation of that wave 1 at around the $0.13 mark. Then we saw a corrective structure in the formation of that wave 2, and after seeing the low for this second wave, whatever we expected next is another explosive move to the upside in the formation of that wave 3, where we had a high at around the $0.67 mark. And in the formation of that wave 3, we also saw this Elliott structure right here in yellow, which is a fractal wave, fully maximizing our target areas, and that is so because of the impulsive nature in the formation of that wave 3. Then we saw a corrective structure in the formation of that wave 4 to the lower side, and that's the reason as to why I'm saying that whatever we are seeing here on the short-term scenarios is the start of an explosive move to the upper side in the formation of this wave 5. And if I give you my minimum target areas to the upper side in the formation of that wave 5, which I'm expecting on the long-term scenarios, we can connect the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then drag the fibs to the high of that wave 3, and that gives me a minimum target area to the upper side in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.82463 mark, and that is the minimum that I'm expecting AGIX to do on the long-term scenarios. And also taking a look at the indicators here on the RSI, we are trading at around the 53 mark, meaning we have massive room for us to fully support that run up to the upper side to fully maximize our minimum target area at around the $0.64 mark, and also give us a break above the 20-day MA and also above the $0.5 mark, which is a significant high. Here on the MACD, we are yet to be able to print that bullish cross to fully support higher prices, but you can see that we are seeing a bit of a sharp decrease in the selling momentum, suggesting that soon we might be able to print that bullish cross to the upper side. So let's be patient and see how that plays out, and I'll be keeping you updated.